Good afternoon, everyone. Welcome to Officer 24/7. My name is Niharika Valia Bhatnagar, and I'm with you with the era of ABFM. First of all, please share the session among your peers and don't forget to like it. Today, I'm going to talk about capital investment decisions. That is personally one of, whether I personally feel is one of the basic chapters to understand Module C altogether. Without this, you won't be able to understand Module C at all. Okay? So, Module C, Module B, these are all covered together. So let's move on to the particular topic there. Chali. Let's move on. This is a victory series and this is the topic that I'm talking about. What are the three main elements of the cash flows in a project, everyone? See, if I look at a project consists of initial cash flows. It consists of not only the initial cash flows, it also consists of other things as well. Initial cash flows, whatever you are making from that particular area, and how do we grow further, है ना? So all these things are included. Initial investment, operating cash flows, as well as the terminal cash flows. Acha, terminal cash flows would be what? Matlab, the one that you are getting if you put your money in a project, what are you getting by the end of it is termed as terminal. है ना? So according to you, what should be the amount? Initial, ongoing, closing, fixed, variable, semi-variable, pre-tax, post-tax, terminal. So I think I've given the answer already, isn't it? That is initial investment, operating cash flows, as well as terminal cash flows. Done? Chaliye, let's look at the next question. According to the separation principle, in estimating project cash flows, what should be distinguished? Revenue and expenses, fixed and variable, investment cost and financing cost, or short term and long term. When I look at separation principle, in estimating the cash flows, how do we distinguish things? See, we are putting the term money in two bases there. That is, either you have investment costs or you have financing costs. Where will you put your money and where will you borrow the money from? This is your borrowing and this is the money that you are putting. So this is the area. Done? Here comes the question, everyone. Which principle which principle suggests that estimating costs separately for activities that would be incurred whether or not the project is run? Consistency principle, incremental, marginal, or post-tax? See, consistency means to utilize the particular, whatever method we are using, we don't change it because this will change the ultimate decision as well. So we are looking at the point which would be incurred whether or not to project is run, whether we are looking forward towards the project or not. So if we are looking at the project, post-tax is not the point. Marginal talks about only variable. So there is only one point. What else are we getting from this particular business is something that we'll consider. That is called incremental principle. Why is it advisable to consider post-tax cash flows when estimating project cash flows? Because post-tax cash flows are always higher than pre-tax. Because ignoring taxes may lead to unreliable discount rates. Because post-tax flows are easier or post-tax flows are exempt. Actually, post-tax is the realistic answer. Everyone, because the fact is post-tax matlab after tax, we have depreciation as well. Depreciation is a non-cash expense. When we talk about the depreciation as a non-cash expense, when we are booking it into the books of accounts, then it is important because ignoring tax may lead to unrealizable or unreliable discount rates. Actually, we can call it this will not remain trustworthy at all. Done. Chaliye then, let's look at the next point. Which factor guides the forecasting of fixed assets requiring in a project? Duration of the working capital, business advances, and gap between statutory dues, or duration of the project or requirements of assets like building, land, or machinery. If I go for the specific answer, what would it be, everyone? What's going to be the answer? Factors which are forecasting to fixed assets. Fixed assets is basically something which is going to help my business to grow. है ना? If it is related to the fixed assets, I won't put my money into something where I cannot see the future, right? Whenever you put your money into a specific asset, you are always looking at the benefits. Do we really need it is the point. So requirements of assets, land, building will determine the particular cap budget. Next question. What factors contribute to the cost of land in a project? Admin fees, employer salaries. Then stamp duty, legal fees, development expenses, electricity and utility, and insurance premium. See, when I'm getting land, I think these are the basic things that I have to pay. I have to pay stamp duty, I have to pay legal fees as well as development expenses. So the answer is B. What might be included in the cost of setting up proper power supporting for the project? Marketing and advertising cost, cost of hiring additional staff, expenses relating to environmental protection or power line installation, internal cabling, transformers, or substations. Everyone, what's going to be the answer? When we are looking at the specific power station, this is actually from the book itself, a specific question related to the costing area. ठीक है? Done? चलिए, now let's look at the particular question. Power line installation, internal cabling, in transformers, as well as substations, all these things are included. What does the competitive bargaining refer to in context with cost analysis? Competitive bargaining. Acha, bargaining is what do we say? Negotiations. When I say कि नहीं नहीं this is too costly or नहीं the price is quite high or it is quite low, है ना? Everyone, negotiating with the competitors for a better price. We're not gonna do the competitors part, do we? Ensuring the company's competitiveness in the market. Procurement, planning to obtain the best prices for assets or benchmarking against industry standards. Benchmarking is a different scenario altogether. The answer is procurement planning. This is actually negotiation based, but just because it is said competitive, it doesn't mean we are having a competition. We are just having a price which would be best for our organization. Done? How does the concept of leveraging contribute to cost optimization? Everyone? Leveraging. Leveraging can be defined as something that can be related to the area of if I don't have funds enough to cater myself, then there's something I have to do. That is, I have to rent, I have to take loan. Leveraging is related to that specific area. You know? So one thing is definitely there, that is leveraging. Leveraging matlab you are in need of a gearing up in terms of your business, and you gear up by introducing our business. You know, we're gonna put this thing into a business by increasing fixed cost, by reducing operational cost, by minimizing the need, or by increasing the production downtime. What's going to be the answer, everyone? Leveraging can be done by reducing the operational cost. See, there actually leveraging is of two types. When you are trying to lever your business, then how can you increase the business? Leveraging can be actually of two types. Number one, operating leverage, when you're trying to run your business, and financing leverage. Financing means when you're trying to increase, this is operating leverages, your current working enhancement. Financing is basically the point where we have financing can be defined as when we are trying to put our money into our business by increasing the scale of operations. ठीक है ना? Done? Which factors contribute to environmental impact assessment during the project cost analysis? Which factors are contributing towards this? Everyone? Which factors contribute to environmental impact assessment? We are looking at the environment. Even sometimes the projects are like we are answering the questions, why is it impacting our business and the world altogether? Employee working conditions, or technology and product type, growth considerations, or research and development? The answer is technology and product type. When we look at technology and product type, this is where we are looking at whether things are going to affect us in terms of the environment or not. है ना? चलिए, why is it important for the project cost to incorporate growth considerations? See, growth considerations are like if you feel that over the period of time the business is going to grow, then तो it definitely makes sense, है ना? More and more funds can be included to minimize initial investment to ensure short-term profitability. If you are incorporating the growth, I don't think short-term profitability would be the point. To meet future capacity enhancement or to avoid environment impact. Chalo, environment impact is definitely out. Then, what's the answer? What if in the future we need more? We need a bigger project, we need more growth to meet the future capacity enhancement needs. That's the answer. Okay? What is the purpose of investment appraisal? To increase the environment impact, to reduce the needs for loans, to decide whether to invest or not, or maintain a large fixed asset register. If I look at appraisal, now appraisal simply says one thing, to decide whether to invest or not. Capital investment decision or project appraisals are based upon this only. You need to make a decision whether you are going for that particular thing or we are completely against going go for it. ठीक है ना? Done? Let's move on. What is payback period, everyone? Everyone? Payback period is actually the period in which we can recover the money. है ना? If I put 10,000 rupees, then if I recover 10,000 rupees, if I recover 20,000 rupees, in how much time I'm recovering my project? It is so important that I recover from my project. है ना? Everyone? Payback period, the time to double the investment. Okay. The period when the initial investment is returned to the investor, the duration for achieving the maximum profitability or interval between investments and revenue generation. The answer is the initial investment is entirely returned to the investor. The period when the initial investment is entirely returned, the entire amount has to be recovered. है ना? 24/7. My name is Niharika Walia Bhatnagar and I'm with you with the era of ABFM. Okay, everyone, first of all, please share the session, like this session, and don't forget to subscribe to our channel if you haven't done it yet. What are we dealing with today? We have started with the area of capital investment decisions. So today I'm going to continue further regarding the project appraisals and the specific topics regarding non-discounted methods. So slowly and steadily we'll be finishing it off this as well. Is this an important topic? This is the base level topic for all the vital topics that we'll be covering further. So it's a very, very important area because this becomes the base for other topics as well. In the module C and in the module B, it plays a very important role. That means we're looking at victory series now, everyone. Okay, here comes the first question, everyone. a capital budgeting technique which does not require the computation of of capital for decision making process is NPV, IRR, MIRR or payback. Capital budgeting which does not require the computation of cost of capital. What's going to be the answer, everyone? The answer to this question is going to be payback period. They're not worried about cost of capital. It is actually worried about the number of years in which we'll be able to recover the amount. Okay? That is covered as payback period. Done? Chaliye, let's look at the next question, everyone. IRR method would favor project proposals which have what? Internal rate of return. This is the rate at which your net present value is actually zero. That means whatever PV of cash flows is available, it is the same as that of the initial investment that you made. If you spent 10 lakh, you are getting your 10 lakh back. That is covered under the area of PV of cash flows. Done? So in this case, heavy cash inflows in the early stages, evenly distributed cash inflows throughout the project, heavy cash inflows at the later stages, or none of the above. What's going to be the answer, everyone? Everyone? Chaliye. What's going to be the answer? Internal rate of return is related to heavy cash inflows in the beginning and slowly and steadily it reduces because of the area of the cost of capital is basically something. If you look at the particular cash flows now, when you're trying to find present value now, it is higher when we are talking about the years just few years from now. Matlab, if it is 0 year today, first year, second year, third year, the PV will be higher. Once we look at fourth year, fifth year, 10th year, the PV of the cash flows goes down and down. Okay? Now, next point. Which principle suggests estimating costs separately for activities that would be incurred whether or not the project is run? Consistency principle, incremental principle, marginal principle, or post-tax principle? Whether or not the project is run. See, we're looking at the project if it is running or if it is not running. Then the answer should be incremental principle. If we keep on working on that particular project, then how much increase are we having? If we just stop right here, then the amount will also stop now. Isn't it? Till the time the amount is defined, this is what we'll receive, this is what we'll pay, then things are different. If it is not defined, then done. Chaliye, let's look at the next question. Why is it advisable to consider post-tax cash flows when estimating project cash flows? See, till the time we are finding this particular value, we should know what is post-tax value. Post-tax value matlab, after we have considered tax, what is the value after it? Because we have already paid tax and this is what is important to us. taxation cannot be removed from the Indian structure. Indian taxation structure has tax. That means whenever we are looking at a particular project, we cannot keep our eyes shut towards the area of tax deductibility and tax calculation. It is very important that we know about tax deductibility as well as tax calculation, whether we should go for the project based upon tax or not, because post-tax cash flows are always higher than pre-tax, because ignoring taxes may lead to unreliable discount rates, because post-tax cash flows are easier to calculate because post-tax are exempt from financial regulations. What's going to be the answer, everyone? I think if I take the post-tax, na, then it is correct. Otherwise, whatever I'm getting, that is the wrong cash flows. The wrong cash flows will give us the wrong discount even. You know? Isn't it? So, what's gonna be the answer? The answer is going to be because ignoring tax will give us unreliable discount rates. So, discount rates will not be justified. So, in this case, it has to be considered properly, because one specific wrong decision is going to affect our inflows and even the solvency of the organization. What is solvency, everyone? Ability to repay. It can even it can even affect the ability to repay the amounts as well. है ना? Done, everyone? चलिए, let's look at the next question. चलिए, next question says, which factor guides the forecasting of fixed assets requirement in a project? If I'm looking at the fixed asset, whether I should buy the fixed asset or not will depend upon what? Duration of the working capital requirement, matlab what is the capital that we require on the regular basis. Then business advances and gap between statutory dues and payments. Then duration of the project, whether we are looking at the fixed asset or not, and requirements of assets like land, building, machinery, etc. The answer is requirement of assets like land, building, machinery. That has to be considered. Then chaliye, let's look at the next point. What aspect does the payback period method ignore? Cash flow beyond the payback period, initial investment amount, time value of money, or profit maximization. When it looks at the basic thing, it actually ignores multiple things. Cash flow beyond the payback period is not recorded in it at all. It is worried about Bhagwan in how much time I'm recovering the amount. They're so worried about the recovery that they don't even care what happens after the project recovered amount is done. Maybe your recovery is lower, but after that you made immense amount. Then I believe the payback period will not matter because I'll get an immense amount in the upcoming future. So cash flow beyond the payback, initial investment, time value of money, or profit maximization. It is cash flow beyond the payback period. Even when the payback period is over, na, even then you can see it. That particular part is not a part of it, the payback period. It has a limited horizon in terms of studies in this area. It is very much limited. Done? चलिए. When is the payback period method suitable? When is this payback period method suitable, everyone? For large scale business, for the projects with uncertain cash flows, for small businesses which are not feasible or projects requiring extensive scientific analysis. But in terms of payback period, na, your horizon is not broadening up. You are just worried about ki in how much time I'm recovering the amount. Maybe you have taken the amount in such a hurry, or you have committed such big amounts that you are supposed to pay them back. Otherwise, your business will fail. So then you are just worried about in how much time I can repay the debt. You're not worrying about what growth you have, what extensive areas are opening up for you, what branches are there for you. All those things will not come up. है ना? So the payback period is for small businesses where it is not worth spending more time and money. It's not really something which we are worrying about in how much time I will be recovering the money. All those things are not required. Payback period is very, very limited to one particular area and how much time I am recovering the amount. Okay? How does the length of the payback period relate to the risk and probability? Longer the payback indicates lower risk, longer payback indicates higher, shorter payback indicates lower risk, or shorter payback indicates higher. See, if I give you 10,000 rupees today and within 2-3 days you're giving me back, the risk is least, isn't it? The risk will affect us because you will look forward to it in terms of future. Na? In this case, if we are recovering it in a very small period of time, in a very short span, then we won't be worried about it. है ना? चलिए, this was about the specific area altogether. Let's look at the next question, everyone. In what type of budgeting exercise is the payback period method typically used? Small scale industries, then we have the large scale in the budgeting exercises, or medium or strategic. When you're looking at totally the budgeting, na, payback period has a very limited horizon. It's just looking at in how much time I'm recovering the money, and that's it. Recovery is the only thing they're thinking about. So in this case, small scale budgeting exercise is the answer. Done. Which of the following statements about the payback period method is true? It is extensively used in larger size capital budgeting decisions. It considers cash flow beyond the payback. It provides a detailed analysis of the project profitability, but it is simple concept suitable for small business. Payback is basically a very simple project where looking at in how much time I'm recovering the money. It doesn't look, I'm sorry, beyond the horizon. It's not looking at in how much time I can recover the funds, what greater things can be brought out of it. All those things is something which is just not relevant in terms of payback period. It's just worried about in how much time I recover the funds. So I can say this is for small businesses. They're just stuck with the era of small business, and that's it. They're not trying to learn what bigger can come out of it. They're not looking at anything else but just the point of small. Okay? Because they are just recovering the funds, na? The growth, the overall long-term longevity of your business, those things are not a area of concern for them. Done. Then comes, why does the accounting rate of return method score over other methods? ARR method is actually an accounting area. It requires estimates for the entire project life. It is a profit centric and not cash flow centric. It involves complex calculation that is based on accounting information readily available and familiar to the business community. What's going to be the answer, everyone? What's going to be the answer? Accounting rate of return is actuated to the percentage of return that we are getting. And that is it. It is just limited to the area of how much amount are we getting as a return. This will determine the feasibility of the project. ठीक है ना? Feasibility of the project, whether the project is worth it or not. That is to be decided based upon the accounting rate of return. Accounting rate of return uses average investment and the returns. Done. Then comes the next question. What limitation of ARR method have? It is a cash flow centric and not profit centric. It does not take into consideration the account time value of money. Whereas it does not. Then it requires estimates of the entire project life. Yes, because we need the entire project area. And it involves fewer uncertainties compared to other. We say one particular truth about it is just it is actually just looking at everything, but not from the futuristic point of view and how much time we are recovering funds and all. It's not their headache. So they just say it does not take into account the time value of money. While time value of money plays a very, very important role. है ना? At the time I don't know what is the time value of money, how will we move forward to this? So that's the answer. Then why does the discounted cash flow method pose challenges compared to accounting rate of return? Discounting cash flow is basically a difficult topic as well. It requires major calculations. Then it is profit centric and not cash flow centric. It is actually based upon time value. So it is not about profit or cash flow. It requires limited data. It calls for estimate of the entire life, making it more uncertain because you are giving an estimation ki, sir, what will happen in the future. Then it uses accounting information readily available and familiar to the business community. If you get into this field, then you will understand having a readily available information might not be required by you because this is not customized for you. While for every organization, the customization is compulsory. So in this case, the answer would be it cannot be doing for the entire project. When we're trying to find it for the entire project, it becomes difficult. So it calls for an estimate for the entire project life, making it more uncertain. Good afternoon, everyone. Am I audible clearly? Let's begin with the session today, everyone. First of all, um, please share the session, like the session, and please subscribe it as well. Subscribe the channel there. Now, we were talking about victory series, and I think I was talking about investment decisions. But today I'm starting with the area of capital investments in terms of international level. ठीक है ना? Done, everyone? This is super important for any organization that sometimes you have to put money at the foreign level. At the foreign level, matlab, I'm putting money in terms of investments in such a way that the amount is too much. When the amount is too much, then what will you do? When the amount is too much, it is very, very important that we take care of the amount in a considerable format. Considerable format means when we are taking care of money in forex. Forex is very, very important. Ki, acha, if the money is in foreign currency, then what are the fluctuations of it? And if the fluctuations are major, how will we cater it? If the fluctuations are minor, how do we cater it? Again, right? All these things are super important when any business is discussing about this basic area. So what challenges may arise due to foreign currency valuation during a long implementation time? Lack of skilled labor, then we have equipment malfunction, rate volatility, or the government regulations. In the long term period, na, I think having your investments in terms of forex is very, very difficult. This is one particular thing, everyone. In terms of forex, it is super important that when we are taking care of it, then we are not facing any problem there. You know? So how do we cater that part? In this case, the problem is rate volatility. Why rate volatility, everyone? Rate volatility is super important because it leads to the area of currency fluctuations. For example, over the period of time, US dollars have become more costlier and costlier for Indians. है ना? So in this case, isn't the charges getting higher and higher for the people? Isn't it? It is important for any business to do this. Then comes the next question. What may be required for elaborate workings and estimate when dealing with forex cash flows, graphing calculators, then typewriters, spreadsheets, or slide rules? Which particular thing is more important, everyone? What would be the answer in this case? It is actually spreadsheets. Spreadsheets are actually used in such a way that you are trying to find out the cost there. Okay? Chaliye, let's continue further. Next question says, what are the examples of direct channels of international portfolio investment? So first of all, I would like to ask you, what do you mean by the term portfolio? But the portfolio plays a very important role whenever I'm trying to put money somewhere. If I am not being vigilant, then I might lose my money altogether. Warren Buffett had said that never put all your eggs in one basket. Why to put all your investments in one particular company when you can spread it out and at least you can reduce the chances of losses by diversifying the risk? What do you mean by diversifying, everyone? Diversifying means spreading up the risk. How can we spread up? Simple, by putting our money into different areas altogether. Done na? Chaliye. Now comes the next point. American depository receipts and global depository receipts both are basically receipts which are made out of the shares only. Exchange traded funds and multinational corporations, foreign direct investing and global mutual funds, or online investment platforms and mutual funds. So in this case, I think I'll go for the answer whenever we're talking about direct channels of investment. What are the direct channels? The direct channels in terms of investing at the international level would be ADRs and GDRs, everyone. ADRs are totally denominated in dollars and exclusively applicable only in USA, while GDRs are applicable in at the international level, but these are also in dollars. ADRs and GDRs are basically the companies goes to these regulatory bodies. These regulatory bodies converts the shares of the company into receipts. If it is used only in USA, that's called American depository receipts. If it is used at every level, it is called global. Done? The answer is A. What is CAPM model? CAPM model plays a very important role in the entire organization there. Why does it play a very important role, everyone? There's a very strong reason behind it. When we talk about CAPM model, now CAPM model is little to of capital asset pricing model, cash, country, or credit. It would be capital asset pricing model. That's called CAPM, CAPM. In a few areas we call it CAPM, in a few areas we don't. It is actually full form is capital asset pricing model. Okay, so that's the answer. The answer is CAPM. In today's class, we'll also study the formula of the same as well. In the examination, can we expect the questions based upon the formula? Yes, we can. And rather, now they have started asking about the assumptions behind the formulas even. Matlab, they are not related only to the area that we understand the topic only, but they also want to know the depth of how the question, how the formulas were made. So this is how they have played, they've started playing, and people think that the examination is pure theory. But the point is that theory also is coming from the area of practical part. So either you know the formula and you will be able to answer properly, or either you just don't know the formula at all. है ना? Acha everyone, how is security beta calculated in CAPM? But this was an important area because beta based assumptions were there. In the examination, they asked a question regarding beta assumptions. So that's an important area to be covered. So everyone, what's going to be the answer? Chaliye, let's look at it. The options there. The first option says by dividing the market returns by the beta, by the security returns, by dividing the variance of the market returns by the covariance of security returns, by dividing the covariance of the security returns and the market returns by the variance of market returns, then multiplying covariance of security with the market returns. What do you mean by beta, everyone? But the beta is basically the area. This is a sensitivity factor, how sensitive an organization is. That's called security beta. The answer is by dividing the covariance of the security returns and the market returns by the variance of the market returns. That's the answer. Done? Okay. Then comes the next question. That is, what does the term risk-free rate refer to, CAPM? The rate of return on high risk investment, the expected return on security with no inherent risk, or the volatility of the market. Volatility is basically due to the rate of risk. है ना? The rate of return on a leveraged investment. Everyone, risk-free rate, the return where the risk is definitely almost negligible. है ना? That means the expected return on the security with no inherent risks. If there are no inherent risks, what do we do? If there are no inherent risks, then it is good, na? If there would be any inherent risks, then what will we do? If there would be, that means the more risk I take, the more problematic it would be. है ना? So in this case, we have to be settled about this entire portion. That are we ready to take the risk? The more risk we take, the sensitivity we have. What does the market premium represent in CAPM? Market premium means more risk, more return, less risk, less return. है ना? That's one of the realities of the life. The difference between the risk-free rate and beta, that is the expected return on an investment, the difference between an expected return on an investment and the risk-free rate or the volatility of the market. In this case, the answer is difference between expected return, actually the return of the market, minus the risk-free rate. That means if I say the rate of return is currently 18%, out of it, the risk-free part, there is no risk involved, is 10%. So that means if I take a risk, then I'm getting 8%. ठीक है ना? If I take a risk, then what would be the charges? Okay, just a moment. So there's one more thing when we talk about the specific area of the question. When we talk about CAPM model is basically uh, the model which talks about the cost of equity. Cost of equity means we are trying to find out what kind of money are we having and how do we look forward towards taking the risk and finding the returns, right? Chaliye, let's see. Here comes the question, everyone. How is the cost of equity, RE, calculated in terms of CAPM or capital asset pricing model? In terms of capital asset pricing model, how do we find it, everyone? Let's look at the question. The cost of equity is risk-free rate of return plus beta multiplied by RM minus RF, beta into leverage, beta of the particular portfolio, RM minus RF divided, or multiply all of these, or RM minus RF into beta. In this case, the answer would be what? First of all, when you're trying to find the cost of equities, it is based upon risk-free rate of return. Risk-free rate of return. You add up your beta, and then you have your RM, that is return of the market minus the return of the area where we do not have any risk at all. है ना? That's the rule. Done? When we talk about this area, na, cost of equity, everyone, if the cost of equity is too much, वैसे तो equity cost is always more. The reason is equity has the control over the organization. These people decides the voting rights. These people decides the decision making. So obviously sometimes it becomes very much troublesome for the organizations, right? So in this case, what's going to be the answer? The answer was actually A. Okay, everyone? Done? Let's look at the next question. What is the purpose of project evaluation in international capital budgeting? Why do we evaluate things? See, I think evaluation is super important because whenever you are putting money, na, I cannot dump my money. It's not like every organization has so much of funds that they can waste. Every organization, while utilizing even a single penny on a person or a machine, they're always wondering how much money are we recovering? Are we even able to recover or not? They have to be very much sorted about it. है ना? So what is the purpose of project evaluation in international capital budget? To determine the success of the project, to gather the relevant information about the project, to identify the patterns. Actually, now we do SWOT analysis. Number one, not only the SWOT analysis, we also try to SWOT is strength, weaknesses, opportunities, and threats. Done. चलिए Once we are done with this entire portion, in terms of project evaluation, all of these things are important. How can we blindside the entire project just because we are putting money into this and that money belongs to the shareholders? Management is always answerable. Where is this money coming from? Where is the money put overall? Whether the money is you put properly or not? All these things are super important for any business, isn't it? Chaliye, let's look at the next question then. Next question says, what factors may lead to the changes in the internal workflows during the project evaluation? Changes in the demand of the product, changes in the risk-free return rate, changes in the project intended audience, or changes in external stakeholders' expectations. What is it, everyone? What factors may lead to changes in internal workflows? Internal workflows are basically the organization's internal level. Now, this is not about the working overall. So in this case, one particular thing that will determine the internal workflows during the project evaluation is our discounting factor. What is it that we are looking at in terms of our YTM? है ना? Without the YTM, can we work? Yield to maturity. So in this case, changes in the demand of the product. Acha. In this case, the main point is about the changes in demand. If the demand changes, then there is nothing we can do. Everything is out of our hand, right? Acha. Next point. What is what one of the key issues involving the evaluating the key projects? Now, in this case, see, demand of the product is one particular part which is not in our hand, but we definitely work towards it. है ना? Now, when we talk about calculate the demand of the product, we are looking at key issues. Everyone, if I'm not getting NPV, net present value, then I think I don't look forward towards getting the particular organization projects at all, because we need money. है ना? Done? So in this case, what's going to be the answer? The answer is identifying the patterns of the project. I just cannot. That's not one of the key issues. Then determining the appropriate discount rate, that can be. We have to find out the discount rates. And then we have reporting the values of the project to external stakeholders. In this case, the answer is to find the discount rates, because that is what we look forward to. Done. That's it for the day, everyone. Thank you so much for being there. But before I end my session, everyone, let's look at our website. I hope you have already gone through the website, but if you haven't, then you should definitely look at it, because the content, everything is already available for you. And I'm with you with the area of ABFM. Okay, everyone, what are we going to talk about today? Today we are continuing with the specific topic further. I'm talking about our victory series. So let's proceed further and talk about a few questions. Okay, everybody, today we are going to talk about sensitivity analysis. What do you mean by sensitivity analysis, everyone? But there are different analysis. Sensitivity is basically how much something can affect you. Can it affect you badly, or it cannot affect you that badly? That is to be covered in this specific area altogether. So in this case, the primary purpose of the sensitivity analysis in a project evaluation is because to calculate the net present value of the project, to identify the factors of impact of NPV, to determine the IRR of the project, or to evaluate the project's profitability. According to you, what should be the answer? Before I proceed further, everyone, please go ahead and share the session among your peers. Don't forget to like this session, and at the same time subscribe to our channel right away. Along with this, check out our courses as well. I'll be soon starting with another batch of ABFM. So if you're planning to look forward towards ABFM now, then kindly join that specific batch as well. That will be really helpful for you. Till then, what's gonna be the answer? Sensitivity analysis. Chali, when we talk about this specific question, what's gonna be the answer? To calculate the NPV, to identify the factors, or what exactly are we looking forward to, everyone? When we talk about sensitivity, now we are looking at something which is highly sensitive. है ना? Sensitive means which we are talking about sensitivity. Sensitivity means if that particular thing is affecting us badly or not. To identify the factors that impact the NPV. Anything which is affecting the NPV is to be seen. Next question. What is the limitation of sensitivity analysis? When you're trying to study something which is affecting our business, matlab it can be any factor, na? Term, time tenure of the business, number one. Number two can be what? Time period for the particular project, the cash flows, the discounting factor, or that's one of them now. One is discounting factor, and discounting factor, and there's one more thing left. Cash flows, the change in the cash flows, initial investment. If the initial investment is less, then it is good. If the initial investment is more, then it is bad, है ना? Because you are spending too much and you are always waiting for more money in your future that you could get. So in this case, it provides a comprehensive view of the project risk. It only shows NPV and one variable in the change. Then comes, it is an objective method based on mathematical calculation. And then it is not affected by the perception of decision maker. The answer in this question would be, it only shows NPV and one variable at a time. The difference between sensitivity, number one is sensitivity and second is scenario. The difference between the two is sensitivity takes one factor at a time, while scenario takes multiple factors. Multiple factors changing at one point of time have a greater impact. Chale. So in this case, the answer is it only shows NPV and one variable. Next question. What is the first step in performing sensitivity analysis? What is that first thing that we'll study, everyone? What's the first thing that will affect our business? Conducting an analysis of the project cash flows, identifying the factors of the impact of a project NPV, determining the range of change of each variable, or recording the result of each iteration. See, sensitivity analysis is clearly saying that you should study only one factor at a time. What's the benefit of studying only one factor at a time? I think when we study only one factor, na, that brings a lot of clarity. How does it bring a lot of clarity? Because we know ki how much of one particular asset we are using, or how much one variable is going to affect the utility of that particular project, whether it's required for a longer period, shorter period, how is it even required? All those things have to be studied now. That is to be considered in this area. So in this case, conducting the an analysis of the project, identifying the factors, what is more important? I think the most important thing is identifying the factors. I need to identify the factors which can impact the project. What is the basis of Hillier model for risk analysis? Net present value, internal rate of return, payback period, or return on investment, everyone? What's going to be the answer? Hillier model is actually based upon which model? The name of this model is by the name of its originator as well. The name is Hillier only. According to his name, it was taken up, and he uses net present value. Even in the international decision making, decision analysis, all these area, NPV plays a very important role. And even in capital budgeting, it plays a very important role. How does it play an important role? Because capital budgeting helps us to understand whether we are getting the money, we are losing money, what's exactly happening with the money, all that particular part. Because net present value considers time value of money. Matlab practicality. If I want to know, if I tell you that after 3 months you might get 1 lakh, you may consider that part. But if I tell you after 10 years you get 1 lakh, you will be like, after 10 years, 1 lakh probably will not be nothing. It will be actually nothing. Not a very significant amount. Today, it might be a little significant. But after 10 years, I don't think that would be. So that's a bad part, right? Chaliye. So, the considering NPV method takes this part very seriously. Let's see, the value of the thing changes a lot. Done? Chaliye. Done now. Let's look at the next question now. The next question says the Hillier model measure the risk in cash inflows. Hillier model actually studies the risk in the cash inflows by analyzing the correlation between inflows and outflows, or by calculating the standard deviation, by assessing the volatility of interest rate, or by determining the profitability index. Everyone, what's going to affect us? Determining the profitability index? No, Hillier model is not looking at profitability index. Then what is it looking at? It is looking at by calculating the standard deviation. What is standard deviation, everyone? Everyone, what do you mean by the term standard deviation? Standard deviation is actually known as the point where we look at the scenario where, see, we have an average. We have an we have an average. When we have an average, then what will we do? If average is 10 and you have 8 or you have 12, in terms of your inflows, it's good if you have 12. But what about outflows? If we are losing, then it's actually bad now. Matlab, I'll always consider it as a bad thing. Why? Because when I'm getting the money in the due course, if I'm getting lesser money, it's bad. And if I'm getting more money, it's good. So if I'm deviating from the standard or I'm not able to make a decision, then things can really affect my business. So in this case, by calculating the standard deviation and the cash flows. In the Hillier model, what is the assumption when cash flows of for different years are perfectly correlated? When things are correlated, matlab if we consider these things and try to find out the values there, na, in terms of correlation, we are trying to find the relationship between different forms of data. You know, if they are basically correlated, then what will happen? What is the assumption? If they are correlated, no risk is associated. No, it is not a risk. The behavior of the cash flows in all these years, it's unpredictable. No, when it is actually uncorrelated, means the data is linked. If the data is linked, then this problem should not occur. Cash flows are similar in all years. I cannot say it's similar. It vary widely in each year. It may vary or may not. What's going to be the answer according to you? The answer to this question is actually it is very similar in all this year. It won't be same, everyone, but yes, it can be similar. Correlated can be called synced here. ठीक है ना? Next question. What is the purpose of simulation analysis? To create real life situations, to find the optimal decision under various scenarios, to deceive decision makers, or to conduct sensitivity analysis. See, when we have multiple things in our regular life, everyone, I don't think I can say only one variable works at one point of time. We might be hungry, we might be having short of time, we might be sleepless, and we would have been working upon multiple things already. So can you say that only one or the other thing was being affected? Or we have multiple things being affected? I would say multiple things are being affected. Hai na? So in this case, the answer would be what? To find the optimal decision under various scenarios. What if one thing, other thing, multiple things are being affected? What are exogenous variables? In simulation analysis. Variable controlled by decision maker, variable determined outside the model, variable influenced by other factors, or variable with fixed values. What's going to be the answer, everyone? Exogenous variables, that means external variables which are affecting the organization. That is variables determined outside the model. Chaliye, let's move on and talk about the next question. What is the purpose of decision tree analysis? But the decision tree is a very reliable source. Decision tree analysis means I said that this is a decision that I want to take, but scenario is this. There's a yes, there is a no. If this is yes, obviously, then two or more situations can arise. Then here also. So if you do something and if you don't do something, both the things are going to affect your business now. What if you do it and what if you don't? In both the scenarios, you're working for the business will change. And if you're working for the business is going to change, then decision tree analysis has to be utilized to represent possible outcomes and associate probabilities graphically. Matlab you will say 10%, 20%, 30%, it has to be stated with that particular percentage as well. Done. What are the two elements of decision tree? We just talked about decision tree: probability and reward, branch and node, cost and time, decision and uncertainty. In this case, one of the basic things that you do is you have a branch and a node. This is the main branch and this is divided into different nodes. And then this is the branch, then it becomes two or more scenarios. ठीक है ना? When we have multiple things, and the things will definitely मतलब multiple scenarios comes out of things. For example, if we study, then what will happen? If we don't, then what will happen? Then if we do the work, then what will happen? Professionally, what growth is available? Multiple points are there. Na? That means we have pros and cons of everything. Right? Chale. Next question. What is the optimal decision and decision tree analysis? See, I think when I'm studying a specific scenario, I just have to look at the entire scenario in a detailed format. Ki what things are coming up. The decision with highest probability, nahi. Highest probability, now we need to see the favorability of something. The decision with the lowest cost decision chosen at the starting point of the tree or decision with the highest estimated NPV. Everyone, while taking a decision, what is it that you will always check? मतलब I'll always see what am I making out of it. है ना? So in this case, the decision with the highest NPV. It's not about what can happen, but what do we want is the decision tree analysis. Because obviously, not externally, everything is in our hands. But at the same time, if everything is not in our hands, there are other things which we can control. What if we can control a few things? And if we can control a few things, then why do we take decisions? Just on the basis of whatever can happen? It is always based upon the favorability. That if I take this decision, what favorable situation or outcome will come out of it? Which of the following is an example of controllable risk? Controllable risk matlab the risk which you can actually hold in your hand. You can decide how much you want. Fluctuation in the market price is not in our hands. Political instability, can we control who's going to be the prime minister? An individual cannot. है ना? Multiple people can, but we alone cannot. Then what's the next thing? Changes in government policy is not in our hands. Last is technological obsolescence. Is it in our hands, everyone? What is an example of controllable risk? Controllable and uncontrollable, two separate scenarios. है ना? The answer would be technological obsolescence. That is something which we can still control, but I don't think anything else is in our control. How can market risk be mitigated? By implementing disaster prepared plans, by diversifying the product or marketplace, by staying updated with the latest laws and regulations by having insurance coverage. Risk can be actually just converted if we diversify it. Diversify it, matlab we give it to someone else as well. Na? That means we are looking into the product, and if one part of the product doesn't work, the other part might. Done, everyone? Chaliye. That's it for the day, everyone. Thank you so much for being there. But before I end my session, have you taken up our courses yet? If you haven't, then what are we waiting for? Chaliye, let me show you our website. And if you're planning, then you can definitely go ahead and look out for our courses. Okay, so I'll just give you a preview of the entire thing. You need to go onto our website www.adda247.com. Go on to the area of JIB and CIB. Once you have entered the area of JIB and CIB, then go on to the specific area of CIB June 2024. Here you will find our Mahapack. Mahapack includes our optional as well as our the optional subjects, compulsory subjects, bilingual, English medium, everything included. If you're planning for a specific batch, that you can also take up our AIM batch. It is also coming soon. This is our AIM batch. Ticket has actually already started. I think ABFM is starting soon as well. For this, what you need to do is use the code Y541. As soon as you'll use the code Y541, you can get that 77% discount. Download the app, you'll get for 78%. You can get for 5519. So hurry up and look forward to it right away, everyone. The time is ticking away and it might be helpful for you. So if you're planning, then go ahead and join our courses right away. Thank you so much for being there. Please like the session if you find it